It's 11 o'clock on Mira Business FM, your latest headlines. A major economic policy was approved yesterday at a UAE Cabinet meeting chaired by Sheikh Mohammed bin Rashid Al Maktoum. The National Policy for Economic Clusters aims to group industries and services like tourism, finance, food production, space and data into specialised clusters. Officials expect this policy to generate over 30 billion dirhams a year in GDP growth and boost UAE foreign trade by 15 billion dirhams over the next 7 years. The goal is to leverage the strengths of each emirate, increase innovation and raise global competitiveness. The US Federal Reserve has trimmed rates by 25 basis points, setting its federal funds rate between 4 and 4.25%. Following that move, the UAE Central Bank also lowered its base rate by 25 basis points to 4.15%. The cut is expected to ease borrowing costs slightly for businesses and households across the Emirates. Dan Richards is the MENA economist for ENBD.
As would be expected given the dollar-dirham peg, the UAE Central Bank followed suit from the Fed with its own 25 basis point move lower to a benchmark policy rate, as did the other GCC central banks. Monetary policy here does tend to move in lockstep with that of the US, and while the strong growth we are seeing here does not necessarily indicate that the economy is really crying out for lower rates, on the other hand, inflationary pressures have been fairly soft recently, so we don't see a particular risk that lower rates will lead to accelerating prices.
Majid Al Futtaim, which operates Carrefour in the region, says it has no plans to bring its new HyperMax brand to the UAE. The clarification follows Carrefour's closure in Bahrain and Kuwait, where HyperMax is being launched as the group's flagship grocery chain.